Hi, welcome to TST Broadcasting, featuring news and views of owners and industry professionals. This is Shep Altschuler, publisher of Timesharing Today, and today we are introducing a new program called Around the Industry. We are being joined by Jeff Weir, chief correspondent with RedWeek and frequent contributor to Timesharing Today and TST Broadcasting. We will be discussing some of the positive changes occurring in the industry, along with the recent impact of consolidations among major timeshare corporations. Hi, Jeff. Welcome to the broadcast.
Shep, thank you for having me. It's a pleasure to talk to you again.
This is our initial program of Around the Industry, and I'm glad to have you join me today. Also, we're going to be talking about various aspects of the industry, and you're covering a tremendous number of issues. But I'd like to start with the positive side. What do you see are the current bright spots that are happening right now as we speak?
Well, on an economic level, the whole industry is better off in terms of the timeshare world, which is generally thanks to just the improved economy. Timeshare sales, if you care about them, are actually improving a bit, according to what companies report. The travel is increasing. Timeshare rentals on RedWeek, which is another barometer of activity, those are very robust. And the impression I still get strongly is that the timeshare owners, the rank and file people that I write for typically, they are still happy to be timeshare owners and able to use their timeshares. The only issue that seems to be looming ahead for many is what to do when they get too old to use their timeshares or get into a position where financially that's uncomfortable. So the exit issues in the industry are still out there to be solved. But I think the industry as a whole is in a healthy position. It's recovered from 2008. The major companies are going through big consolidations, which will probably lead to new travel opportunities for people. And so there is some change in the industry. It'll be interesting for people like you and I to watch it, and for owners, and I am an owner myself. For owners, I think there will be more opportunities for using vacations in different ways than there have been before. And I'm hopeful, based upon what I've seen at a couple of companies recently, that these long-term issues of what to do with your timeshare when you can no longer use it will be solved in a way that is respectable for everyone and allows owners to have a positive end game when their timeshare era is up.
Well, let's talk about some of the specific or segments. For example, you look at the developer community as one segment of the marketplace. They're obviously expanding aggressively into the vacation club points mode, and that seems to be the model that they're going to be building on for the future. Talk a little bit about consumer preferences in that arena at that level of the points programs and the vacation clubs that might be compared to the traditional weeks programs that are out there.
Well, what's happened in the last decade probably, maybe a little more, but much more aggressively in the last few years, is that all the major companies have gone to a point system, which they claim offers owners much more flexibility. So the legacy weeks are a thing of the past. They're dinosaurs. You can't buy them anymore except on RedWeek and other resale entities. Those are actually wonderful bargains because legacy weeks give owners, one full week of usage at a resort of their choice, and you can buy them on RedWeek for probably 10% of what they sold for originally. So that's still a live option for people, but for new buyers or even existing owners who go to owner update presentations, the only thing you can get now is points. And in a way, that's a good thing because of the potential variety of ways you can use points. For example, instead of using, a whole week at a time, you might use points to cut up vacations over 3 different weekends. And if you could stretch the points to do that, that gives you that flexibility to stay in a nice place for 2 days and three nights another time and conclude your vacation in smaller chunks. And a lot of people like that, particularly the younger travelers who like to basically make a decision on the spur of the moment, pack their half of a suitcase, and go to New York for a weekend. And the travel industry is well aware that the new upcoming buyers of the future and users want much more flexibility, spontaneity. They do not like lifetime contracts. They don't like having to make a reservation a year in advance. They really value their community spirit to be able to act as free spirits. And older timeshare owners, and that would include me, they actually like some of those flexibility changes too. And as a result, all the companies that are offering, vacation intervals now are really just offering points packages, and you have to buy a certain minimum level, and if you want to travel more, you got to buy more. But that's the name of the game now. The product, the timeshare traditional product has changed. Legacy weeks are still available in resale, but not through the major developers. And the developer community claims that these are all direct responses to consumer demand. And if that's so, those are all positive changes. The only downside to the points program, and the jury is out on this question, and that is, do they have any value at the other end of the spectrum? I know in a couple of companies very well where I'm an owner whose points are worthless on the secondary market for a variety of reasons. So that is an issue with points. It's a different one. If you own a deeded week, you can usually sell it to somebody if you have a nice vacation spot. But in any case, the vacation clubs, they are the fruit of the day in the marketplace of timeshares. And most older legacy HOAs are trying to align themselves with either management companies or vacation clubs to deal with their excess unsold or unused inventory. And it's a good way for them financially to recover from too many defaults and delinquencies.
From the Timesharing Today perspective, we see a good number of licensed timeshare resale brokers who have been serving this segment of the market for decades, placing more emphasis on the branded products, but also continuing to serve weeks owners whose timeshares do have resale value. There are also a number of on-site resale brokers who focus on weeks resales at specific resorts, so they're creating a market presence for those weeks opportunities. Along with them, there are online advertising services that are entering the market to help owners generate both resales and rentals. But we clearly see the vacation club points models as having the wind in their sails. Yeah, and also just to finish the point on the weeks programs, that in areas where you have high demand resorts and you have high demand destinations, weeks programs still resales are still pretty vibrant. It's the problem area is in those off-season shoulder weeks where there is no demand and low traffic for the destination and for those types of resorts. That's the essence of where the problem is within the industry. Is that the correct assessment?
Well, from what I see, it's a mixed bag. I know of several HOAs that are legacy resorts that in the last 2 years have gone from brink of insolvency to hiring a new management team, suddenly starting a resales program of their legacy weeks that have been turned into the HOAs, started a rental program to maximize their travel opportunities, and as a result, seeing occupancies go up and revenues go up. So I don't think it's totally a one-sided downhill slope. I think in the areas where people have attractive timeshares in highly valued locations, and I live in the Lake Tahoe area, and that would be one where, despite having lots of timeshares, it's a very high-value area that people want to go see from all over the world. So if you own a timeshare in Tahoe, it's probably got an ongoing value. As you noted, there are lots of eastern seaboard, New England, and South Carolina, places like that where there are just too many old seaside timeshares that aren't fillable during the winter. They're hard to monetize, and those company HOAs fall into the category that Arctic calls the dead cat's bounce, meaning there will be some that won't make it. And we'll see that flush out over time, because one thing about the timeshare world is that it's not static. Companies move slow, but developments happen quickly, and this attrition of older legacy resorts will happen probably in the next decade, where they either go out of business, or their timeshare plan ends, or they vote to dissolve themselves, or they resuscitate their business model by bringing in some good business helpers and turn their legacy resort into a shining new jewel all over again.
Talk a little bit about your reporting and analysis of these consolidations that seem to be happening, acquisitions within the timeshare segment. How do you see those? And if you can talk to a couple of specific ones, there's a trend developing there. And do you see that as a good or a bad for the industry?
Well, I can talk about several because I've been following them very rapidly. The two most recent are Interval Leisure Group, which is a big giant conglomerate, buying the Starwood Vacation Club. And that added the Westin and Sheraton vacation clubs to their stable. And Interval Leisure Group, as you can imagine from the name, already owns Interval, the exchange company, and they already own Hyatt, another high-end, high-value timeshare group. So ILG, as they call it, now has one of the world's biggest and most prestigious stable of timeshare vacation opportunities. And the question for the massive ownership at ILG is, what do they do to synergize owning all of these companies in the same space? So far, there's been no real change beyond just name changes, but I have received some contacts from Vistana, which is the new name of the Westin and Sheraton Timeshare Club instead of Starwood. Yesterday, I received a note from them saying, because you are a member of Vistana, you have extra special discounts on interval exchanges. So that's an example of how when companies consolidate under one banner, suddenly they can start cooperating with each other in a different way that monetizes each other's interests better. So I would expect to see that at the ILG groups. And if you're a Starwood owner or a Hyatt owner, I would think you would look forward to this because your travel opportunities might improve, and your interactions with Interval, if you use it, might improve as well.
And also, I want to mention that ILG acquired VRI, Vacation Resorts International, and Trading Places, so that their portfolio has expanded into the management area and into an area of another exchange company.
Shep, that's a very good point, because the management services piece of the timeshare developer world is extremely lucrative. In a typical timeshare environment, and I'll take Diamond as an example since they're much in the news these days. Diamond just did their quarterly report where they announced that their management services section of their business earns about a 15% profit per quarter. And that's on a cost-plus basis where Diamond manages, I think it's 99 resorts, mostly in the U.S. Their management team at each one of those resorts gets a 15% cost-plus management fee, which means if they collect $5 million a year to pay all the expenses of the timeshare, they then also get 15% of that $5 million as their fee, and there's no downside to it. So the management end, as you pointed out, is a bigger and bigger deal of pure profit-making for the developers.
You indicated about another recent acquisition, or mentioned that to me before. So, what is that all about?
Well, consolidation is rapidly happening in lots of places, but the most recent example is the Apollo Global LLC private equity capital group buying Diamond this week. And Diamond's future has been on the trading block for 6 months because of investor pressure that the stock price is too low. And the stock price for much of the last year was hovering around 20, and the hedge fund investors that own most of Diamond stock wanted it to be 30. So they have been pressuring management for several months, going back to December, to find some strategic alternatives to increase shareholder value. In the intervening 6 months, Diamond has had a rough patch of negative publicity, questions raised by regulatory groups about their business practices, and consumer groups and consumer activists complaining about Diamond's business practices. So in this oddball period where they were looking for strategic alternatives, they were also getting sort of bombarded from various sides for various alleged misdeeds. Now, none of those things have come to fruition. It's just the environment that Diamond was in while it was seeking a buyer. Well, they found the buyer, and the Apollo Group is not a hospitality company. It's got like $170 billion in assets, and it typically buys companies and waits a few years for their business to improve and then takes them public again. In this case, they're going to take Diamond private. They're going to buy up all the shares. Diamond stock has already gone up to nearly $30 a share just this week on the news of this merger. And the real question ahead for Diamond owners and for anyone involved or interested in what Diamond does is, now that they become a private company where they do no public reporting whatsoever, whether the issues that have dogged them for a number of months will get cleared up or whether they will increase, and whether, most importantly, this potential threat of government regulation will continue to follow them. And no one knows the answer to that, and no one yet knows whether even the management team at Diamond will stay there another week. It's all very fluid. The only notice that Diamond has made to any of its owners is a short one-paragraph email that I received this week along with all of Diamond's other owners, and it just said, we wanted to assure you that Diamond has been merging or is about to merge with Apollo, but everything about your wonderful travel plans will stay the same and your ownership will not be affected. And that email was signed by Diamond Resorts. It was not signed by the CEO of the company or anybody else. It was about as anonymous an email as you could get. So I am sure, having watched a lot of mergers in the past, there will be many changes at Diamond. As an owner at Diamond, I hope those changes are beneficial for owners who use and have owned for some time. But I'm also skeptical because changing a Diamond from a public to a private company just takes it out of the limelight. It does not necessarily change anything for the better or the worse. It just makes them harder to follow. And for Diamond owners, it means they're entering an era where there's going to be less information about their company than ever before.
How about those Diamond owners such as yourself that may own stock in the company?
Well, I know a bunch of them who do that deliberately so they can listen to conference calls and attend Diamond events. But those days are over. Those few stockholders are going to get paid off by the Apollo Group when the merger closes in a few months, and they're going to get a check in the mail, and that's it. It'll be goodbye. There will be no more public stock trading of Diamond stock. But so those people will get some communications from the stockholder end of it. I'm getting them from the timeshare owner end of it, and most of the time that's my focus because Wall Street is way too complicated for me.
Well, Jeff, thanks so much for joining us today. It's been very informative. It's good to hear about the new dynamics and some of the positive things that's going on, and we look forward to scheduling another program with you.
My pleasure, Shep. I look forward to it.
And this concludes this program from TST Broadcasting. At Timesharing Today, your opinions really do count. And if you'd like to comment on today's broadcast or participate in a future program, please email staff@tsttoday.com, subject TST Broadcasting. Until next time, happy timesharing.